Like a lifestyle here. Another market recap. Choose a dame with a past and a hero with no future. Alright. Trying some jazz again. Cut that down a little bit. So today's market recap for round 23. Jordan number for today, August 25th. Today's my father's birthday, so happy birthday to you, Pops. I wish I could show you how much I've learned, but where was I? Oh yeah, watch list. So today was a decent day. Getting better at locking in my strategy, taking advantage of moving up profits and whatnot so that I don't have as much losses. Today's watch list was Allstate, Ally, CAK, Comcast, Dropbox, Dust, Excel, Hollex, Honeywell, 3M, Netflix, PCB, VTRS, and VXX, which is a inverse ETF to the SPY. It's a volatility index. You guys should Google volatility indexes like the VIX. It basically plays the VIX, which is a future that tracks the volatility of the market. Before we get started, of course, as always, Stock Market Playlist. Follow me on IG and on Twitter. And let's run through it. So, as you can see, I have wrote tight spread, tight put, tight call on a lot of these trades. But then as the trade started to activate, the spreads were no longer there. Let me see, what was a good one? Like Triple M had a tight spread of about $7. But as the volatility rose, the spread jumped to about $20. And I'm not going to trade anything with more than a $10 spread. Going forward, I'm going to minimize that to $10 spread and higher. So you have to have a spread of 9 or less for me to want to trade. So yeah, let's go over what died. USS Steel again. You guys remember from yesterday, let's do the 2-day 30-minute. UX Steel triggered here, the $30 call for the monthly triggered here. Early, secondary triggered here. Went up to $28.49. First price level was 31. Nah, okay. It was probably $28.50. I didn't have a price level. First price level was $28.50. That's my fault. And didn't hit it yesterday. Yesterday the call was up maybe 30-40%. Should have sold it. Died. Reopened today, was up like 10%. Fell back down. I got into the monthly call further out. I got into a $30 call. Yesterday it was a $28 call. $28.50 call actually. So this time I got into a $30 call for a month out, way cheaper. And it didn't do anything. I set a tight stop loss of like $8. I got in at 81, got out at 71. So I lost $10 there. Got the fuck out. 13% loss. Honeywell, the 240 monthly call was triggered at 231.61 at 105. I wanted to get it at 100. I could have got it at 103. But I got it at 105, just like the day before when I got that call for 25 and I could have got it for 23. So sometimes, don't just take the bid or the ask price. See if you can negotiate a little bit. I could have easily, hit the down on the price 2 times to change it from 105 to 103, would have got filled, and then maybe I wouldn't have got stopped out. Who knows? I might have still been in this to see what happens tomorrow, but I set a tight stop loss. It ran up here to around 20%, so that means my stop loss is a break even. So my stop loss went from like $80 to 105, which is where I got in at. And it went up here. It went up here the first time, came down. It was down like 10%, came back up to here, went a little bit higher, was up to maybe 25, 26%. Probably should have sold it there, but I was like, it hasn't hit 40, so I haven't locked it in yet. Hindsight now, maybe I'll just take it at 20 and earn my right to the 40%. It depends on how quickly it moves. If it's a slow mover, maybe I'll just take it to 20% and see if I can get back in tomorrow. Because it's kind of right back at the entry point. So I could have got up here, took my 20% profit, waited for it to come back down, got back in down here to see what it's going to do tomorrow. Because then I could have risked, you know, that profit here to just be break even all around for the chance of a bigger move tomorrow. Because there's a chance this could pop tomorrow, or it could be down here and it was a smart move to get out with a $4 loss. $4. So today I lost like 12 bucks. Who gives a shit, right? That's the beauty of tight stop losses. Now last Monday when I had my Bloody Monday, my stop losses were not tight and I lost $300. But you see, when you tighten them up, you don't lose as much. I mean, yeah, you might miss out on, you know, a little fluctuation, but I'd much rather only lose 10 bucks than potentially lose 40 bucks when I was only going to make 20. So what was triggered? ALLY, Ally Financial. This one was one of the few that triggered at the open. $55 call triggered at 52.50 and it ran. A lot of trades, as you can see, all these tight spreads and tight calls, a lot of these weren't hitting. A lot of the spreads were getting too wide. You see under the target zone, see bad movement, bad spread, false break. A lot of the spreads expanded on me and there was just nothing to do. So there was nothing for me to trade. There was nothing to trade. If I can show you, this was my watch list. Now all these tickers down here aren't up here anymore because I erased them as they became shitty trades. Now the ones in blue are the ones that had a tight spread. So these are the only ones I actually looked at. So when that happened, I was stuck with Comcast, HON, which is Honeywell, and X from the day before. Nothing else wanted to move. All these trades and nothing wanted to move. So I was like, I guess I'm not going to trade anything today. I was really close to taking Comcast at 20 bucks because they had a tight spread, just like Corsair the day before. And I was like, well, it could run to 40 just like Corsair did, and that'd be a nice little trade for me. But it didn't. I mean, it's still at 19 bucks, so it's only down $1 from where it was. So it could very well die tomorrow. So I'll keep an eye on Comcast because it has such a tight spread. And it had one of the highest volumes for a trade I've ever seen. I'll go over that in a minute. ALLY call triggered 52.50. CAH, Cardinal Health, 47.50 put was triggered at the open at 51.49, went down 50 cents. So you probably could have got a good 10, 15%, maybe 20% off of that. I didn't catch it because I didn't like the way it was moving. I think it was the, yeah, it just didn't hit anything. I don't think it was the volume on that one. Dust, $20 call for the monthly was triggered right here at $20.95. And it ran up almost $1 heading towards the actual entry for the daily call. But the problem was the spread was horrible. The spread was like 30 bucks. I'm not taking it. So I didn't track it. I just got rid of it. I'm not taking it. Excel. I had played Excel before, and now I see why I lost last time. It's because the spread was shitty. And it doesn't move. Excel, $20 call at $19 on the nose for 35 bucks. It went all the way up here, 30 cents up, and it did nothing. The call moved absolutely zero. So I'm like, even if I took that trade, I wouldn't have won nothing because it didn't go anywhere. Triple M, the 190 put at 155 triggered, and it blew through several price levels all the way down here, but there was a horrible spread on it. The spread didn't look good until it got to the bottom. By that time, the spread was like within $7. It was like a 183, 190 spread, but the entry was 155. So it's already up 30% before the spread corrected itself. So I wasn't gonna take that either. PACB, $35 call on the monthly was triggered at $29.75. You consider that a false breakout because it had a big green and then a big red to erase it. So you had to get out right up here. If you got anything on it, you might have got 10, 20%. And then that was it. VTRS on the put, $13 put for 10 bucks. I got, let me see, VTRS. This one hit down here, but the spread was shitty. The put was still 10 bucks. It's just the bid side was now $5 instead of $0. So you got, I guess it went up 50% technically, because the spread was 0 and 10. So you could have got it for $5, maybe, but the volume wasn't that high. And then down here it hit for 7. It went from 0 to 10 to 5 to 10. So now your spread is 750. So you could have got, you know, 20%, 40% maybe from $5 to $7. Maybe I should have watched a little closer, but I was like, I'm not watching this crap. Once I see there's a 0 on the bid side, I need to just leave it alone, because there's just nothing there for me. AMAT monthly call hit. It was re-triggered from the day before. The early entry and the real entry were both re-triggered, and it actually hit this time. I'll go over what it hit for in a minute. Honeywell, like I said, the 240 call trigger right here. It was up about 20%. Then it died. Peak. $37 call on the month. Triggered at 35.36. Right around here. Ran up a good bit and just died in the aftermarket. I should put this on the died side. I forgot about this part. But not sure what happened there. Didn't take it because it wasn't moving either. And the spread was bad. It was like a $15, $20 spread. I'm like, I'm not taking it. And X. Once again, X hit the 2 entries and died again. So X has a trouble breaking over 28.50. That seems to be the point. It doesn't want to go anywhere. And DHI. You remember yesterday I sold it for a stop loss here, and it went down to here. In the morning, though, did this mug wake the fuck up and ran through the price target, hit an all-time high, and is now dying. If it did what it did yesterday, it's probably gonna hit 100 tomorrow. I'll tell you how much that hit for. Why I'm kind of pissed I sold it so early. But that's another thing you learn as you go. So ALLY hit for 70%, like I said before. Triple M hit for, let's say, 30%, but the spread was bad, so I stopped watching. VTRS hit for technically 40%, but the spread was bad, I didn't take it. AMAT hit for 22%. AMAT spread, it was a bad spread also. Yeah, the spread was bad. It was like a 150, 170. I'm gonna just start watching these bullshit spreads. HON, this is where my strategy bit me in the ass. I should have took the 20, 25% up here. Instead, I got a 4% loss. But had I got in at 103, I might not have hit this loss down here. Because it closed me out at 101, but the value was still at 103. So I'm out of, I might still be in there for tomorrow, which we'll see will be good or bad tomorrow. DHI. Guess what DHI did? DHI hit for 425% at 98 bucks. From 53 to 225. And I could have just held on to that one. I took my 80 bucks and ended up losing out on $140 extra money. But hey, you never know. Had I had 3 contracts, I definitely would have caught this. Since I only had 2, that's the risk you take. I mean, I'm still up 50%. You can't be mad. Just would have been cool to have been up, you know, over 100%. Over 200% technically. But, you know, you live and you learn. And, yeah, that's what did that. So that's done today. It's technically a red day. But a small red day, like a single finger nick red day. So we'll see what tomorrow brings. And yeah, thank you guys for watching. Follow me on Twitter, IG. Get the playlist. Listen to some jazz. Stay hydrated. Get your libation. And wish my father a happy birthday. And I'm going to stop it at 25 seconds.